Hello everyone, we're going to talk about startups today. First, let's do some introductions. Here I have Pearl Chu from Clyne Partners, and I'm Caroline Mense from Legal Enablers. Hello Pearl.
Hi everyone, my name is Pearl. I'm from Clyne Partners. Just a quick introduction about Clyne Partners. Clyne Partners provide a powerful integrated mix of accounting and taxation services, all under the banner of real-time strategic thinking. We give you information that is relevant, valuable, and timely for your business. Here at Clyne Partners, we have three main pillars of our service that we can provide to you. The first one is the reporting and compliance. The second one is outsourced solution. And the third one is advisory.
Fantastic, thanks Pearl. Hi everyone, and here at Legal Enablers, we help you grow and protect your business, and we help you through the growth journey. The types of work that we do include establishment agreements, so these are your shareholders agreements, partnership agreements and trusts. Your T's and C's, so these will be when customers sign up to work with you, your website policy, terms of use, marketing and consumer law advice, employment agreements and HR, and industrial relations law. So these include the Fair Work requirements and enterprise and modern awards provisions, and your warehousing lease. So, Pearl, about starting a business. What are the key things you need to consider when starting a business?
All right, before we get into the key things to start a business, I think the very, very important thing that you need to think about before you start a business is a name. You need to think about a name that is unique to you and your business and that is still not available on ASIC Business Name Register. Why? You just can't call yourself Coca-Cola because that has already been trademarked by Coca-Cola. So if you have anything that is unique to you and you want to have it just for yourself, find a name that is not in the register and trademark it. Contact your lawyers and trademark it. And then once you get a name, secondly, choose the right structure for your business that suits you. So what are the structures? There are four main structures in Australia here. The first one is your sole trader. Second one is your partnership. The third one is a company. And finally, trust. And once you and how do you actually consider what kind of structure that suits you? So there are 6 main factors, in my opinion, that you should consider before choosing the right structure. Number 1, every state has its legislation and jurisdiction. So if you want to open up a pub or a bar, what kind of license you need to open up a bar or a pub? So licenses is number 1 thing that you need to consider. Number 2, taxes. If I run a company structure or partnership structure, what kind of tax is going to be effective and efficient for you and the business? Taxes is very important. Now, number three is something that is very, very important that everyone should pay attention to. Potential liabilities. Different structure covers you differently, which we will touch on a little bit more later, but you need to consider what kind of potential liability you will be exposed to in the future if you start a business. The fourth one is compliance. We have state compliance, we have federal compliance. And do you need to lodge your tax? That's also compliance. And the answer is yes, you always need to lodge your taxes. But yeah, compliance is very, very important. Why? The last thing you want is to have the government coming after you, knocking down on your door, telling you haven't lodged your tax return. So that's really the last thing you want to have happening to you. The fifth one is cost of setting up, maintaining the business. So different structure, once again, is unique and different. So some can be a little bit more complex and some can be more straightforward. So the cost to set up the business and maintain the business is something you need to consider. Whether you can also, have the money and the resources to maintain and set them up, pretty much. And finally, what is your long-term goal for your business? Do you just want to set this up in 5 years time and flip and sell to someone else? Or you want to have a legacy to keep it going and running for the next 100 years? So long-term goal is just as important for you when you want to start up a business. Once you have all these key factors considered, always get your insurance, and work cover. Every state has different insurances and work cover. Get yourself covered. I can't stress that enough. The next thing you need to consider is having a business. What kind of accounting software? What will help you? I would say, what's your main goal? Your main goal, yes, having a legacy if you want that to run for the next 100 years. You need to have a good accounting software that will save you a lot more time sitting in front of a computer trying to figure out which account needs to go where for which transaction. I think that's the last thing you need to spend too much time on. Honestly, you also have accountants to do that. So get them to do that work for you. The next one is, okay, it's a fun one, but it's a good one and it's also good to remember. Always have your accountant or your lawyer's number on speed dial.
Speaking of lawyers and accountants, next up we'll talk about why you need a shareholders agreement or a partnership agreement. Fundamentally, it sets up the rights and obligations of the parties. We look at things like what is everyone putting in and what percentage ownership do you get as part of having ownership of the business. So will you get 50% or 49% or and we'll also look at what exactly are people putting in. Are they putting in money or are they putting in sweat equity, so work? And when you're looking at how much work people are putting in, will it be calculated by the number of hours that they put in, or will it be calculated based on the outcome that they produce? Whichever way you choose, my recommendation is that it's clear and able to be identified, so that down the track, everybody knows what you need to do in order to achieve equity, in order to achieve your percentage of the equity in the business.
Yeah.
Also, looking at how are dividends paid, when are they paid? Smooth management. So this looks at things like how is the appointment of a managing director, what happens if there's an impasse. This allows the managing director to make a call, make a decision, and allows the business to move on. Whether or not shares are able to be sold to other people outside of the business. So the people who have shareholding in the business are the people who have ownership of the business.
Yeah.
There are different types of share classes available. There are ones for that's known as an ordinary shares. Ordinary shares provide you full rights, whereas there are other types of shares that you could, for example, provide to employees that while they won't have rights to be able to vote for the appointment of directors, but it would allow them to be remunerated a percentage of dividends, and this encourages them to work for the business and for the long-term success of the business. My recommendation is that if you are providing an employee share class, is that when they leave the organisation, that share class, those shares automatically be returned to the business. So that way your employee isn't able to sell their shares in the entity to a third party as well. And in relation, and the final one, which is also incredibly important, it comes down to how do people leave the organisation, whether they're a shareholder or a director. You want to make it really easy for people to be able to make the decision to leave, and there's a clear process. It saves heartache down the track. Let's say things don't work or somebody dies. What happens to those shares? What happens to that percentage of ownership in the business?
Yeah.
So, for example, let's say a business partner dies or wants to retire. You don't want to suddenly find yourself in business with your business partner's spouse, for instance. So an automatic buyback is a fantastic way to protect you and your business and your long-term strategic goals. So more flexibility. So there you go. So as mentioned above, there are 4 structures to set up your business. And specifically, Pearl, you'd be looking at partnership and companies.
Yeah, so we touched on 4 types of structure, but we will just focus on partnership and company because mainly because it's the popular choices that people go for. The other popular choice is trust, but that's another topic because that can get a little bit more complex. But we'll just talk about partnership and company. So what are difference company and partnership? The main differences I think we can agree upon is your assets are being limited if you're with a company, or more of that. Sorry, I meant liabilities are limited if you're with a company than with a partnership. Partnership. So there are 3 types of partnership you can look at. There are 3 different arrangements. The first one is a popular one, general partnership. A general partnership is where all partners are equally responsible for the day-to-day operations and businesses, and all partners are equally liable for all debts and obligation. If it's 50-50, everyone have a say at everything, and everyone have much of the same liabilities and consequences that everyone has to bear. So it's a fair thing, like 50-50 or 1/3 to the other and that kind of stuff. The other one is limited partnership. This is not say it's rare, but it's it's not unheard of, but it's rare. Limited liability are made up of GP, which is your general partnership, whose liability is limited to the amount of money that they contributed to the partnership. Limited partnership is usually passive, and they won't play in a day-to-day management of the businesses. So their role are more of a silent partner as compared to a general partner. The third one is incorporated limited partnership. So partners in incorporated limited partnership can have limited liabilities for debts for the business. However, under this arrangement, there must be at least one general partner with unlimited liability. If the business cannot meet its obligation, the general partner becomes personally liable for all the shortfall. So, not that it's unheard of, it's rare, mainly because of the liabilities that is fully on the general partner. So, because of, I think, lack of a better word, fairness in ILP, a lot of people don't really opt for it. But if you do, and if you want to choose one of these 3 arrangements, Caroline has mentioned having a good written up partnership agreement is very, very important. It not just covers you, but also your other partners fairly. And the other one we talk about is company. Now, as I mentioned before, company, it's limited liability. So a company in itself is a separate legal entity from a person. So this company can also incur debt, you can sue, and you can get sued. You can be sued by another person. So just like partnership, but partnership, you will personally be sued. Whereas like if there is a legal proceeding happen, the company gets sued and not the director themselves. However, there are other clauses for what is personally liable by directors, which we will touch on another time. But if anything, if your product is it's not good, or like the company has negligence, that they sue the company, they don't sue you personally or the shareholders for that matter. What else?
It provides a buffer because it means that then they're doing business with the company itself as opposed to you personally. And it means that then they can sue the company. Let's say if there's a debt that's been entered into, or a contract that's been entered into between parties, and then something goes wrong, then they sue the company itself, provided you haven't provided direct guarantees.
Of course. Yes.
It provides you that a shield of protection.
Yeah, definitely. Yeah. So it's a popular one, company. Most people do opt for this, mainly because it has longevity. If you want to have a long-term legacy for your company, it also provides an easier entry and exit of shareholders. If you want to do cap raising, it's just a lot easier to do it under a company, because all you need to do is to issue more shares. Obviously, your share will be diluted because there are more shareholders coming on board, but it's an easier way for entry and for exit as well. And that's why Caroline also touched on earlier in her services, she provides shareholders agreement for these reasons as well. So for entry and exit, it's also important to have them all imprinted in your contract. Whereas a company, as compared to a partnership, company is actually being governed by the federal government, which is called the Australian Securities and Commission, ASIC, Investment Commission.
You got it.
And the directors are governed by the Corporation Act 2001. Caroline, do you want to quickly just in a nutshell touch on directors' duties and responsibilities under the Corporation Act?
Okay. I'm not going to touch on all of the directors' duties, but ones that are particularly important when we're discussing with an accountancy firm are your requirements to your duty of good faith, care and diligence. So you need to have a really firm understanding of what the finances are of the business, how the business is doing. Directors also have a responsibility to ensure that the business is producing the financial statements and reports that's required under the Corporations Act. So that's one of the reasons why you need to have undertaken a reasonable steps. So a great example of that is engaging an accountant like Pearl and having that understanding. Specifically, directors have a responsibility not to engage in insolvent trading and to make sure that the business itself is not making decisions that would put the finance of the business at jeopardy.
Yeah.
And so before entering into a transaction, you need to know what actually is the cash position of the business and what actually are the cash forecasts of the business, and will the company be able to meet its debts and liabilities, and will be able to meet its, you know where I'm going with this.
Exactly. Yeah. No, that's a good point, Caroline. You've touched on really well on the director's due diligence and responsibilities. And that's why I always have your accountants and your lawyers on speed dial. Should anything happen, or they are the person you need to reach out to. I think the other thing about company is it can get complex when you set it all up. Mainly because you not just involve yourself, you will have shareholders, you will have entry arrangement or exit arrangement. But once these are all set up properly, it's smooth sailing, and then it's just you go forth and make your legacy and make more money for yourself. I think that
Pearl, if you're a small business and you're setting up from scratch and it's just you may well be the full, the sole shareholder and director as well. That's a big possibility as well. And that provides you full ownership of your business. And then later on down the track, let's say if you wanted to bring somebody on as for extra equity, then you're able to do that as well. And it gives you that flexibility.
Exactly. So there is flexibility. Even if you're just a sole director or a sole shareholder for the company, there is flexibility to bring on board new people for whatever reason there is. If you need to do capital raising, there is a flexibility there because you have that in your contract to help you to get going. So I think, that's good. These are all just partnership and company in a nutshell. Caroline, is there anything you would like to add?
No, I think we've covered it really nicely. To wrap up, Pearl, what's the best way to contact you?
Okay, so you can reach out to me at pchew, P-C-H-E-W, at clynepartners.com.au. You can also check out our website below and our LinkedIn and other social media platforms. Now, there are great resources for Launch Victoria for startup business, so do feel free to check them out and check out their website. And Caroline, how can anyone reach out to you?
Thanks, Pearl. best way to contact me is on my email address, Caroline M, CAROLINE M @legalenablers.com, or on the website below. Thanks so much.
Thanks, guys. See you next time.
Yeah, see you next time. Thanks so much.
Bye. And thanks, Caroline.
Thanks, Pearl. Really enjoyed today.
Same.